Gold and Bitcoin are witnessing a massive rally. Both assets have hit record highs in recent days. Usually, a rally like this is reason to cheer. Traders like to call it a bull run, but that's not the case this time. This rally is fueled not by bullish sentiments, but by fear. Yes, fear is driving the surge in gold and Bitcoin. They are seen as safe haven assets amid global uncertainty. Gold has held the status for decades now, but Bitcoin is earning the same reputation. Like I said, this is a rally fueled by fear. Investors are not looking for momentum, they are seeking safety. And here's what's weighing on their minds. In America, investors are worried about government shutdowns. In Europe, the French government is in chaos. The Prime Minister's office has become a revolving door. French stocks fell after the recent government collapse. Even the euro is feeling the pressure. A similar situation is playing out in Japan. On Monday, Sanae Takaishi was named the country's new Prime Minister. Japan's yen witnessed the fallout. The currency's value has tumbled. These headlines are from the past few days. Investors are watching them closely. They all point to one thing that investors fear most: uncertainty. Markets don't like uncertainty because you can't plan long-term investments when policies keep shifting. They make the investing climate more risky. Therefore, the rush toward assets like gold and Bitcoin. Now, is this a temporary phase, or is it a long-term trend that is shaping up? Some signs are emerging. Investors want to protect their investment. They want to reduce risk. It seems that they are preparing for the long haul. Two trends point toward this. First, the pivot away from the dollar. The greenbacks has been losing its value this year. The dollar has lost 10% of its value. So investors are moving toward gold, silver, and Bitcoin. As the dollar's value has dropped, the demand for these assets has shot up. Now, this is especially true for the central banks, and here is some data from August in that month. Now, the central banks bought 15 metric tons of gold. China's central bank has been among the major buyers. Last month, it bought 40,000 ounces of gold. How much gold does China have in its reserves? Over 74 million ounces. Now, how much is that worth? It's well above $280 billion. Remember, China is the world's second largest economy. It also has significant holdings of US government debt. So the gold stockpile is clearly a hedge, a way to reduce dependence on the American dollar. China is not giving up entirely on the greenback, but like many others, it's looking to diversify, and investors are taking notice. So that's the first trend. The second factor at play is rising debt. Debt levels are up and they are shaking global markets, and they are driving what's now being called the debasement trade. Now that's when investors start moving away from traditional currencies and shift their money into alternative assets like Bitcoin and like gold and like silver. Now, why is this happening now? Because some of the world's biggest economies are drowning in debt. The US, Japan, and much of Europe, governments are struggling to manage their finances, and that is weakening confidence in their currencies. So investors are looking elsewhere. They want stability, and they're finding it in assets that can't be printed or inflated away. According to the UN, global public debt hit $102 trillion in 2024. That's up from $97 trillion the year before. It's the highest ever recorded, and it's forcing investors to think differently. So these are the two key factors: a pivot away from the US dollar and rising global debt levels. These are not temporary risks. They point to something more structural. More importantly, they are shaping a long-term trend within the markets. Markets are watching closely because the risks aren't just rising. They may already be here, and the system is beginning to respond.
Want the facts?
The latest developments?
News that gets straight to the point.
Well, we've got all three just for you. This is Firstpost Live, a brand new show, your window into what really matters.
Don't miss it.